Folks, welcome to the Contrarian Trader and the best stock picks video. How did we do this past week? It was a good week. We booked profits on PTOG within 2 days of trade, about 180%. It's an OTC stock. Another OTC stock, VTMB, which I posted as our Contrarian Trader 2014 best stock pick or penny stock pick for 2014. We booked 750% profit on that trade. Great trade. Congratulations to my members. So what are we looking to trade this coming week? Well, I'll make no secrets about it. I am bearish on this market. I have been bearish on this market. In fact, on December the 23rd, I posted a blog. It's still up there. In fact, I'll post the link on the comments section below this video on my blog that I believe that there would be a 2014 correction. We already had one. I think that we're going to go lower. Could I be wrong? Absolutely. So we'll go over the charts. Now, just because I am short of this market, with my largest position being short, does that mean that we're not trading to the long side? Absolutely not. We did book some profits, and we are long of several other positions, mostly defensive names, longer term. However, we're still trading to the long side. We're trading around that core position, which is net short. Now, what makes me so bearish on the overall market? After all, don't we have a new Fed president who could obviously see any storm clouds on the horizon? Absolutely not. In fact, they released the Fed minutes from 2008, and Janet Yellen, who was the president of the San Francisco Fed at the time, she made jokes about how people were postponing their plastic surgery. It was a joke. She didn't see the storm clouds that were on the horizon, yet in 2005, June 30th of 2005, my antenna went up. And I am no rocket scientist. But obviously there are no rocket scientists on the Federal Reserve Board either. I have no confidence in them. Now, what happened on June 30th, 2005 that caused me to get bearish on the markets, and especially on the banks and the home builders? It's because KB Homes came out. You got to keep in mind the time we were in. It was the go-go days of the home building bubble, the banking bubble, the credit bubble. And KB Homes came out and they sold their most profitable division to Angelo Mazzillo, who was in charge of Countrywide Mortgages. And I sat there scratching my head. Why? What do they see? What are they so concerned about that they sold off that profitable division? And that's when my antenna went up. The following month, KB Homes hit an all-time high of $71.67. It's never seen it again. That was the peak. So they announced the sale of their financing unit on June the 30th, and then the following month, they hit an all-time high, peaked, and that was it. I'm going to go over the chart of that in a moment. I'm going to go over a couple of other charts that should have everybody watching this very, very bearish and very, very concerned about this market. But the key to trading is one word: humility. Can I be wrong? I ask myself that 10 times a day. Can I be wrong? So let's get to the charts. If you have any questions, be sure, leave a comment below, because if you have a question, somebody else has a question. If you're watching this on YouTube, please subscribe to my channel. Just click that button there. And if you're watching this on my blog, enter your email address, get my best stock picks video every week, as well as my trade reviews, how we did on a trade. Could be a loss. You know, you learn from your losses. And also you'll get some trade tutorials, how we like to trade the markets. So let's get to the charts. And again, if you have any questions, leave a comment below. All right, let's get to the charts. Okay, so let's begin with the monthly chart of KB Homes. Remember, this is one of the biggest home builders out there, especially during the go-go days. Again, monthly chart, and this chart goes back to the mid-90s all the way to current date. And here's where we peaked out, right here in July of 2005. On June the 30th of 2005, they announced the sale of their financing unit, and that was it. The party was over. You could see that we pulled back, bottomed out at 14, rallied to 69.14 and put in a lower high. The minute we broke that back down below 51.14, you knew the party was over for a very, very long time. We have yet to see anywhere near the highs that we did back in 2007. The stock market, the S&P 500, which is overlaid here in black, continued to outperform for almost another 2 years until it put in a double top and began its breakdown along with the home builders. So the point I'm trying to make is that sale of the financing unit of KB Homes was a contrarian indicator. And instinctually, it told me to get ready to short the markets. Did we get in that short right then and there? Of the home builders, we did, but not of the overall market. But now we're beginning to see the setup on the overall market for a similar breakdown. Take a look at this double top here in 2007. It looks quite familiar to the top that we saw in 2000, the double top, and also what we're seeing right now, a potential double top in the S&P 500. Let's take a look at a couple of other charts. The IWM. All right, so why else am I bearish on this market? Well, on December the 23rd, I posted a blog titled The 2014 Stock Market Correction. And on that blog, I wrote that one of the big concerns that I had was diverging money flow, which you have overlaid here, versus the Russell 2000 price performance. So you can see the trend continues to remain down with money flow, yet the IWM, the Russell 2000, continues to make higher highs. So we did pull back. Now what we want to see is whether or not we will take out 117.37 on the IWM, or will it fail? And there's good reason to believe that it will fail. Let's take a look at the daily charts of the major sectors. Dow Jones Industrial Average, daily chart, topping tails. We had a key reversal on Wednesday. Key reversal is a sign of selling pressure. This is a psychological event. You have the markets moving higher, yet when the markets move higher, you have sellers move in. And I put out a market pulse check video to members on that afternoon, Wednesday afternoon, after the market had closed, saying, look out below. This is a very, very bearish event. The markets rallied on Thursday on very light volume. And then on Friday, what did we get? Another key reversal. Folks, you cannot ignore these types of storm clouds. The last time we had a serious key reversal was back in November of 2013, and it led us down to a correction. Now, another big setup you're seeing here is a head and shoulders setup. Left shoulder, head, right shoulder. It's one of the most widely telegraphed head and shoulders setup I've ever seen, so I wouldn't be a bit surprised to see it fail and to see the markets rally to humiliate those that have been touting this formation for so long now. However, I can't ignore it. Let's acknowledge the fact that we do have a potential head and shoulders setting up here and pay a little bit of respect that it certainly do. S&P 500 daily chart. Here you have a key reversals again. Same as the Dow Jones. You do not have the same setup, the head and shoulders setup, as you do on the Dow Jones Industrial Average. When taking a look at your up volume on the S&P 500, it's been quite weak. Yes, Thursday's bounce back saw some average volume. However, the prior day's down volume was quite high. It was above average. And Friday's down volume was greater than Thursday's up volume. That's not healthy. The Russell 2000 daily chart. Look at this rally, a beautiful rally off of the 107.27 level. And again, in December, we called for this correction. However, I'm not satisfied that this correction is done and over with. Doug Kass, great trader, follows me on Twitter. I follow him. He believes that there's going to be a correction. I'm with him on this. Take a look at the key reversal on Wednesday. Bearish key reversal. Then we had the bounce back rally on Thursday. And what did they do on Friday? I sent out an alert to members because the futures were bright green. I said, do not chase this market higher. It's short covering Friday. Do not chase this market higher. And what did they do? They spiked the market higher right into resistance and sold it off into the close. It closed up 36 cents on the day, but if you take a look at a 1-minute chart, were it not for some buy programs in the final 2 minutes of trade, this market could have closed lower, another key reversal on Friday. It did not. However, I would not be sleeping very well with a topping tail at resistance. Topping tail implies selling pressure above. These people back here who bought want to be made whole. They want their money back. That's why you saw that price action on Friday. Now, take a look at your volume. This beautiful rally higher, and take a look at the volume. And this is what I've been pointing out to my members. It's non-existent. Take a look at Friday's volume. We were up over 1/4 percentage point on the day, on Friday, on volume that was well below average. When I see volume bars dropping off a cliff like this, and you see the markets heading into retest resistance levels, I have to throw a caution flag onto the track and warn people of the storm clouds that are out there. Now, can we break out to all-time highs, and might I have to stop out of my short position? Absolutely. And I'll discuss that with members on the week ahead commentary. So what am I looking at in terms of my best stock picks for the coming week? I like the Direxion small cap bear fund. This is a leveraged ETF, puts you short of the Russell 2000 by 3 times. Very, very volatile. I like the chart. We broke out for the first time in 2 years of this declining downtrend line. We rallied, pulled back, and we're holding that support level. Can't be ignored. So what else do I think is bearish on the overall market? We'll take a look at the Russell 2000 Microcap Fund. Bearish key reversal on Friday. Look at this volume, the selling volume on the IWC. Huge selling pressure. The semis. Beautiful breakout on Thursday, and then you had a breakout point failure on Friday. Very, very bearish price action. The XLF, the banks, they haven't been rallying. They did not recover from Wednesday's key reversal. So the banks are lagging. You need, in a healthy market, the banks and the Russell 2000. Without them, it's very, very difficult for the overall markets, the S&P 500, to proceed higher. The retailers. The retailers are already broken, folks. They have begun their breakdown. And I'm expecting to see a continuation breakdown. This trend is over, done. Weekly chart. So what if I'm wrong? What's my call on this overall market? What if I'm wrong about this sell-off and the markets proceed higher? Well, I have to be honest with you about something. The NASDAQ composite on a monthly basis, we still have a few days left in the month, looks pretty good. If I am wrong and I have to stop out of our short position, I think that the NASDAQ is going to take out 5132 or at least retest it. Those are the highs seen back in 2000. Why? It's because the media will demand a story. Wall Street will require a story, and the media will deliver, and that will keep everybody excited and in the markets. So this is not lost on me. We are right at the precipice of seeing a breakout on the NASDAQ comp. Where we closed last week out marked the failure of the NASDAQ composite to take out 5132, a double top. And then we proceeded to break down. So We are at historic resistance on the NASDAQ composite. And if we break through it, there's a good possibility that we will take out 5132. So am I a perma bear? No. Do I see opportunity if I am wrong on my short position? Yes. I think we're going to the 2000 highs on the NASDAQ composite. And that's it, folks. Again, please subscribe to my YouTube channel by clicking that button there. If you're watching this on my blog, please enter your email address and get notified of my best stock picks videos, as well as my trade reviews, post-trade reviews, and my trade tutorials on how we trade the markets. And I will talk to you soon. If you have a question, leave a comment below, and I'll be certain to get back to you. Enjoy the remainder of your weekend, and have a profitable week next week, and I'll talk to you soon.